The stock market to some degree today has absolutely lost its marbles. We opened at 406.08 on the S&P, fell all the way down to 394.82, a massive, what is that, $10 drop on the S&P. And now we're back to 401.19 currently. We still have a little bit of time towards the end of the day. In my opinion, we're either going to sell off into the end of the day or we are going to rally into the end of the day. Now, we do have a big catalyst coming out tomorrow that is going to be big for SoFi stock, but if you guys were unaware, SoFi stock was halted for a very long time today. Why is that? Well, SoFi accidentally released their quarterly results. We need to go over exactly what is going on with this situation. So thank you guys for tuning in. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, and let's get straight into this information. And that is obviously the first thing that I want to talk about is what is happening to SoFi stock. SoFi was down as much as 18% today. Now we're currently only down about 7%. So all things considered, we were down 18%. We're only down 7% now. We have since recovered about 11%. But SoFi accidentally releases first quarter report early. Shares of SoFi fell sharply on Tuesday and were halted for nearly 3 hours after the company accidentally released its first quarter results early. The company said the report was released early due to human error. SoFi was scheduled to report its results after market close on Tuesday. Although its latest results topped analyst estimates, its forecast for the second quarter was weaker than expected. Now, if we go ahead and take a look at exactly what SoFi said, SoFi actually did come out and revise their estimates back to the upside. They actually came out and raised their full year 2022 guidance after that situation had come out. So it's kind of tricky. It's definitely a tricky situation that we are in. They, gave weak guidance. Now they're giving good guidance, but their numbers were overall good. So this takes a lot of the potential risk out of SoFi stock because you got earnings out the way, right? So if SoFi stock is doing this now and recovering such a large amount after quite honest, neutral report, it was good. It wasn't great. But it's always weird when those reports come out by accident, and there's usually never a bullish reaction to that. So I think you kind of got juked, we'll call it that, on the earnings potential rally that we could have seen directly after the report, just because of the timing of this report actually coming out midday. Does not happen all too much. The most notable one that I can think of was Affirm last earnings season, and that thing dropped like 30% intraday when that report actually came out. Now, you can see we are taking a dramatic move to the upside, and what initially happened once the report actually came out is the stock rallied quite a bit from a low of about $4.97 per share all the way up to about $5.34 per share. The stock went up about 5 to 10% and then instantly came right back down, sold off all the way down to $4.82, and that's when the company halted its shares. And now, the stock is trying to roar back, and we'll see if it actually goes positive by the end of the day today, but it's looking pretty good. Now, for the catalyst tomorrow, it's obviously going to be CPI. Now, I think we all expect CPI to come in lower than expectations. If we take a look at exactly what the expectation is for CPI, it says April's CPI estimate will be announced Wednesday before the stock markets open. Expectations are for all items rate to drop from 8.5% to 8.1%. To hit 8.1%, the month-to-month inflation rate will have to fall from 2.3% in January, 2.6% February, and 3.8% in March to no more than 1.25% to hit the expected number. And I think it's going to happen, and I think we might actually be very surprised with the CPI number that actually does come out. And obviously you could point to a lot of different things there. But I just think by and large, if you're talking about the stock market potentially going up on a CPI release, you guys got to keep in mind the stock market, the NASDAQ is currently down about 25%. Heading into today, we were down about 27%. Obviously, it's been a pretty good day for the NASDAQ, up almost 2%. So we are recovering some of those losses, but still 25% since January 3rd, 2022. And if you take it further back than that, you're down like 30% still from all-time highs. So it's a substantial move down. If you look at the S&P, we're only at 401.76. So really in the grand scope of things, we're still at the lower levels that we have been in the past 2 trading days. Like we're still at the same level we were yesterday. Right? We have just moved around a lot. Now, if we do get a CPI report that is good, or at least right on expectations, I do expect that we could see a 1 to 2.5% rally. If we get a good CPI that's less than 8%, comes in at say 7.7%, then you might actually see a 3 to 5% boost in the markets. Well, why is that? Because everyone is bearish, so it's not going to take a lot to actually see a lot of short positions start to get covered. And at the same time, there was people that came out on CNBC today, a lot of them calling this the market bottom. And a couple people in particular that have really, really good track records. And that's what kind of boosted us the first couple of minutes of trading, really the first minute. And then we inevitably did sell off once the Fed started to make their comments. Like Cleveland Fed Mester says comfortable with 50 base point rate hikes at next 2 meetings. Fed Bostic says can do maybe 2, maybe 3 half-point rate hikes, then assess basically assess the situation. So some hawkish Fed comments after obviously a lot of enthusiasm in the beginning of trading, and I think that's what caused this major drop down to 394.82. But let's be honest here, people don't even trade the stock market anymore. Algorithms trade the stock market. People, I think, do very little buying or selling that really affects the markets. It really comes down to algorithms and how they feel on any particular day, if we want to be 100% honest here. So it's really going to come out to that initial report and how the algorithms want to push the markets. But I will say, you're basically right now expecting inflation to last a very long time, and you're expecting a very deep Fed-induced recession. If there becomes a question or a possible doubting of a deep recession, or that, you know, the Fed will just forever continue to raise rates, or potentially that CPI will eventually come down, maybe if it's not, you know, by the end of this year getting to 4 or 5%, but by 2023 maybe you're back at 3%, you might start to see a different narrative playing out in the markets, and that's what could give us that 3 to 5% rally that I am talking about. But obviously it could be the same thing to the downside. We could fall 3 to 5% as well, so it's one of those things. Don't be naive about the possibility to move big either way, and you're seeing that run up, it looks like, into the close today, but we'll see exactly how it does end up playing out. Now, I do want to talk about SoFi a little bit more and talk about the numbers that did come out. So it says for the quarter, SoFi reported a loss of 14 cents per share compared with an expected loss of 15 cents per share, according to analysts surveyed by Renoviv. The company also beat revenue expectations, reporting 322 million versus 286 million estimate. So substantially beat estimates. What's that? 14 plus 22. What is that? $36 million they beat expectations, over a 10% beat in revenue expectations. But I really think the timing on it was just really, really bad, especially when it came out. You guys could see, like, the markets were not in a good place when that report came out. Not at all. That came out at about the 11:17 candle right here. Let's go to the 11:17 candle back here. About right here. The markets were at their lows for the day. And that was not good timing at all. It really sent the algorithms into a bit of a panic. Now you're seeing, obviously, people are digesting the report, and I think people are seeing that, hey, this company is actually doing very, very well. Now it says, however, its second quarter revenue forecast was weaker than expected at 330 million to 340 million. Analysts on average were expecting revenue of $343.7 million according to FactSet Street account. I'm not sure what they revised their forecast to. I imagine it's higher than 340, maybe in the 340 to 360 range, and maybe that's why you're seeing a rally right now. But still, it was a great quarter. It was a great quarter. I mean, they had a smaller loss per share than expected, and they beat on revenue expectations by over 10%. It says SoFi CEO Anthony Noto told CNBC's Rooney that he believed that some of Wall Street's expected numbers could be out of date following the company's April 6th update, which lowered net revenue expectations for the full year. The drop for the stock brought SoFi to roughly $4 billion in market cap. The stock has lost nearly 70% this year. SoFi is not the only other fintech that has come under pressure recently. Shares of AI lender Upstart dropped more than 50% on Tuesday after the company cut its full-year forecast. Shares of the more established PayPal have been cut in half this year, due in part to weak earnings guidance the firm issued in February. So the sector has not been the greatest, right? All things considered, SoFi is performing very, very well. And we'll see if you do, see a very positive day tomorrow. It would not surprise me to see a 10 to 15% positive day tomorrow after the algorithms get to take a little bit of a sleeper overnight and hopefully not freak out as much and be able to digest some of those great earnings numbers, because they were great. Like there's not very many bad things you could actually say about SoFi's earnings. So that is that. Very unfortunate situation of events. Now let's take a look at SoFi's data. All the information that you guys need to know, option activity, short interest, all of that good jazz. And that's not SoFi. Let's go ahead and pull up SoFi. 20.23% short interest off free float, so short interest is still going up. Current shares that are sold short of 147.22 million, cost bar max of 7.94%. The share utilization of 100% and days to cover is sitting at 4. So we are primed to see some level or some degree of short squeeze if you do see the markets turn around and people start to expect inflation to potentially come down later this year, or the Fed potentially not to act as aggressively. SoFi is really primed for a lot of shorts to go ahead and cover. So we'll see if that exactly happens. Who knows? It's anyone's guessing game. Eventually, they are forced to buy back their shares and get out of their short positions. That's exactly, your obligation if you short a stock. But nonetheless, it could take a little bit of time. Now, the option flow activity is 14 orders totaling $417.2 thousand, positive order value of 15%. You could see a lot of these short-term near-the-money puts that are coming through, and that is helping to artificially short SoFi stock, and that is not necessarily reflected in the actual short interest because it's via option activities. If somebody is going out and buying a $5 put or whatever the strike is with a very close break even of say 0.5%, if the stock falls 0.5%, the market makers have to go out and short 100 shares per one option contract, right? That's how these things work. That's how delta hedging, gamma hedging works for market makers, and that's how you have a fluid options market, and it affects stocks either positively or negatively. So I think that's really what we've been seeing a lot of as of recently. So that is that. Let's go ahead and look at SoFi and just talk about the technicals, where we currently sit. Kind of tired. $5 per share. That's going to be the key level. We fell to $4.82 per share, a new all-time low today, and then we sharply bounced back up. So we're now sitting at $5.48 per share, and I really don't expect us to go under $5, especially now that we see earnings, and we see that earnings were good. We'll see what the guidance actually comes out to be. Maybe, the algorithms pick up on it. Maybe they don't. But the fact that we came right back above $5 per share is definitely a good thing, and SoFi stock is not yet considered a penny stock because it is not sub $5. Wanted to put that in for you guys. Now, if we do get some potential momentum to the upside, maybe tomorrow, maybe CPI is good, whatever the case is, watch $8.27 per share. You've seen this recently where stocks can actually drop off of the earnings report, and then over the following next couple of days can actually, start to see that rally. And that would not surprise me in the case of SoFi, just considering what happened with the timing of their earnings. Like, it couldn't have gotten worse. Like, you couldn't have even leaked those earnings at a worse time. Like, maybe down here, but I mean, you leaked them at the low of the day. Like, the absolute worst thing that could have happened. So, I don't know. Human error. Call it what it is. It's probably not a human error. Who knows when it comes down to it. But I think this is a lot of reassurance that, hey, SoFi is on the right course and SoFi stock is doing very well. Getting close to actually being positive on an EPS basis, only, losing 13 cents per share, 14 cents per share is not bad at all in my personal opinion. Now, the max pain should be about $7 per share by the end of this week. Yeah, about $7 per share by the end of this week. So we'll see if we do get close to those prices as well. Maybe with this drop today, it does move things around quite a bit. But I do expect a very violent potential market rally tomorrow, or a very violent market sell-off tomorrow. Oh my god. Oh my gosh. And then every time we drop 4% like we have in the markets, it puts a lot of pressure on the Fed to potentially try to slow down their rate hike initiative, right? Just call it that. Because when the stock market falls like that, you really start to affect the underlying economy. Like, how many IPOs have you seen this year? Like none. Virtually none. This is one of the worst, if not the worst, markets that most people have ever seen in venture capital markets, private markets, or the equity markets. This is comparable to the .com crash, but the only difference is these companies are actually established and making money and real profits. Back in 2000, they were not. It was the exact opposite. None of them were making real money. None of them had profits. None of them even had business models, or a good portion of them, say half of them, never even had a way of getting to even making any kind of revenue, much less actual earnings and bottom line profits. So all in all, I think a lot of bad news is already priced into the markets. And I think if we get the slightest sign, to bottom line this, if we get the slightest sign of potentially inflation will come down and the Fed potentially won't have to move as aggressive, that's why I think you could see a very strong day tomorrow. So that is going to be all for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for tuning in no matter where you are. Subscribe to the channel, all of that good stuff. Now, you guys enjoy the rest of your day, and I will see you in the next one.